Hey, welcome back to my live stream. We are going to talk about stocks and the big sell off we had yesterday that is now being followed up with a reasonable rise in the stock market. Now, when we have such a severe sell off one day and we get to the next day, I'm always worried about the head fake, the market showing us one thing and then doing another thing. So I wanted to go through, and it's nice to be streaming a half hour after the market opens so that we could see, is the market going to do a head fake? Is it going to go up, kind of a relief rally, but then followed with a lot of people kind of going back to the fear that led to a big sell off yesterday? I think that's possible. We'll see. We have to give it maybe a couple of hours. But on a day like this, it's a day when I really don't trade early in the day. It's just I need to see what truly the market sentiment is. It's one thing to kind of understand, hey, the fearful stuff is somewhat played out. Um, we'll look at the economic data that was released, see if we can interpret that and see how it's going to affect the market. But I still think there may be a head fake. We may see sell off continue. I hope I'm wrong. There's sometimes when I'm like, I hope my spidey senses are wrong because I would love to see my stocks go up today. They've been going up for most of the year, and it could just continue the really positive year. But let's take a closer look. So, everybody, thanks for joining Android PC Gameplay. I appreciate you joining. It's good to see you. I hope you're having a good day, a good morning. Your stocks are rallying. Your coffee's good. All things are doing well for you. So it looks like the Dow, man, the Dow's kind of been in a crummy zone for December, and looks like it's up 0.5%. S&P is about the same. Boy, they're kind of around the same higher percentage level. Looks like the NASDAQ is breaking out a little bit. The NASDAQ, smaller stocks are getting it done today, up more than 1%. Nice job. We've got some stocks that I watch that are interesting. Zoom is up almost 3%. Coinbase is up. CVS, it's interesting. When all stocks were selling off yesterday, CVS did catch a rally, and so did United Healthcare, as well as other stocks in that category or that sector and industry. This one here is down today. I guess the small rally in CVS was not going to be sustained. Boy, the healthcare spaces we covered yesterday, it's just not a pretty picture, and they're not catching any breaks. Might be a very good buying opportunity because Valley doesn't get held down forever. Money's money. Money spends the same whether you make it in healthcare, you make it in technology. It spends the same. It's good money. So we'll see. All right, so we'll take a closer look at some of these stocks. Alphabet, Alphabet's had a terrific December. Just some stories have come out, and they're stories to kind of tell us about their company and remind us of how good that company is. The Robotaxi story just makes everybody refamiliar with the fact that they are the leader in Robotaxi. They are driving people around in major cities in the US and soon to be in Tokyo, Japan. And their technology works. It's in the market. It's being used by thousands of people every single day. So they could sell the platform. They can operate a service. It's a real positive story. The other thing that is doing really well with Google is their AI business. Their Gemini business just keeps getting better. It's being rolled out on phones. It's being rolled out everywhere. And I imagine that's going to cannibalize their own search engine, but that's better than somebody else taking over that type of business away from them. So good news from Alphabet, and looks like the stock's up 1.26%. Very, very good. Okay, so Looking at the GDP report, the GDP report came in, and GDP growth is actually price index, excuse me, 1.9. That's what it was expected. And the growth rate, 2.8%, actually came in at 3.1. That's positive. That means the economy is growing faster than what was expected. So that's a bit of good news. And then we've got initial jobless claims. That's when people go in and say, hey, I lost my job. I'd like to receive unemployment benefits. That number came in lower than what was expected, lower than was previously. So that's positive news. Positive, positive. Continuing jobless claims, a little lower than previous, a little lower than expected. Core prices, a little bit higher, but this was good news. This worried me a little bit yesterday, thinking if this number, let's say, came in at 250, I think we would see a second day of a lot of red on the screen. But it looks like the employment market is good for employees. There is one story out there that Amazon workers in certain locations have gone on strike. They're trying to form a union, and I know that they're going on strike. They timed it for it to be during their seasonal peak, and we'll see how that plays out. So the news around employment data, it came in, and it came in favorable. So now, listening to the Federal Reserve yesterday and how they're not going to be quick to reduce rates all that fast, it kind of makes logical sense. If you have an employment market where people have jobs, you don't have very high unemployment, why would you be in a hurry to reduce rates? You're just going to create more inflation probably, because you don't have an employment problem or unemployment problem. So you can be patient on interest rates. It's a little bit of bad news, I guess, for if you're trying to sell a real estate asset, a real estate property. It may take you a little longer, because rates for a person that wants to buy that property, whether it be an investment property and it's a commercial loan, or it's a residential property and some family wants to buy a property you're trying to sell, they're going to pay a higher interest rate, because interest rates, especially on the long end, long interest rates, 10-year bonds, they went up substantially yesterday, and we'll look at them again. And when I looked at them, they went up again today. The 10-year went up again. So the 10-year is going up, which means the interest expense on a purchase of a real estate asset is higher. So that's just going to make it more expensive. It's going to make it more expensive both for residential purchases, people buying a home, or from an investor perspective, if it's a property investor, they're going to pay a higher interest rate when they make a deal. So I think that's going to have an effect on real estate. We'll see. Looks like the lower interest rates that were happening earlier, I guess, in the year, led to November having a home sale surge. That might be the case. I'd have to read into that article. In real estate, I am seeing that inventory is really building up, and that's good for people that are looking for properties, whether to buy and live in, or people are looking to invest in. More inventory is better for the buyer. Then you have better choices. You probably get a property that really meets your needs, whether it's going to be for a place that you're going to live or a place you want to invest in. I've did a video on my channel where I looked at a 6-unit property in Orange County, California, and just prices are too high. It doesn't make sense. I could do far better as an investment, just investing in bonds, and it's almost zero risk. So I'm going to hold off from buying another property, but probably every 3 to 6 months, I'm going to look at the market. I like looking at, the real estate inventory that's available, kind of seeing what's out there and seeing what that investment looks like. So more videos to come. They'll just be spaced out a little bit more on real estate. Primarily, I'm active on stocks, so we will get back to stocks and take a look at those. Tomas, thanks for joining. Hola, buenos dias. Very nice to have you. And if you guys have a stock or a topic you'd like to talk about, please put it in the chat. We will take a look at it. I thought we could look at a few stocks that announced their earnings, and one of them being Lennar, General Mills, and then Jabil, which I'm not familiar with. So it'll be interesting to take a look at that company. I'm not familiar with it, so we can check it out together. So Lennar is a home builder, and it looks like they announced their earnings yesterday, and their stock is, it looks like, Tomas, you want to talk Meta and Google? Happy to. We will do that. So Lennar is a home builder, and I believe they're one of the biggest ones, if not the biggest home builder in the US. And they, looks like they had weak Q2 results. So they're selling off today, and they're selling off on a day when stocks are really rebounding. Now let's take a look at the 5-day. 5-day does not look pretty. Down 12%. Let's look at the 1 year. The 1 year down 6%. Wow. So they were really flourishing. I owned Lennar for some time, and I sold them. I probably sold Lennar too early because they just kept really going up. It was a surprise to see how the home builders flourished during a period of time in the real estate market when there was a lot of scarcity. I thought with COVID creating a lot of economic uncertainty, creating a lot of fear, why would people be buying a home? I mean, that's a massive commitment, right? You're in the US, you're making a commitment oftentimes on a 30-year loan, and buying probably the biggest purchase of your life. And people were doing it. They were buying houses. They just wanted a real estate asset, and they were buying new homes from Lennar. So their stock really flourished. So it was a mistake to sell too early. But it looks like for the past year, maybe things are catching up with Lennar. They're just not able to grow. Let's take a look at their financials and see what's going on. Mike, good to see you. Thanks for the question. CCI and Qualcomm. Let's take a look at those. I most definitely know what Qualcomm's about. I am a stockholder and continue to buy. Let's take a look at it. CCI, I'm not quite sure which one that one is, but we'll take a look at it. So here's Lennar, and we're looking at their growth rate, and you can see that they continue to grow. And look at this growth rate right after COVID. They just took off, and I think that they were able to increase their prices because there was scarcity of real estate, and people had to really pony up a big purchase price if they wanted to buy a house from Lennar, a new house. And then after, really having great successful years in 21 and 22, 23, not so much growth, 24, not so much growth. And it looks like they still had growth, 3.5%. That's really good. Now, I got out of Lennar because I thought it's just not sustainable to expect that home builders are going to continue to flourish. Real estate on the home building side, it is a little bit of a cyclical, cycle. They do well for a while, they suffer for a while, they do well for a while. And it looks like, it's time for them to kind of suffer for a little bit. Maybe that buildup of inventory that I was talking about in real estate. Now Lennar has to compete with existing home sales that people are looking at. Maybe those areas are a little more desirable. Lennar tends to build in areas where there's land available, which is in suburban areas of big cities. Well, people want to be at the center of the city near their job, maybe near, the where things are always happening, things that are interesting and so forth. So maybe that's what's happening. So their growth is slowing down. I'm curious to see what their quarterly looks like. See, this is probably what's driving that stock drop is that quarterly their sales dropped 9%. And as I've mentioned before, I like looking at, revenue growth because revenue growth tells me, are customers really liking what that company's selling? Are more customers coming to that company? And the quarterly for Lennar tells us that in that quarter, fewer customers are coming to buy a home from Lennar. And is that going to be a trend, which is going to basically mean that the revenue for the company is going to go down? It could be. It could be. And Kiter, what's up, and Kiter? Good to see you. Yeah, Micron took a huge hit. I saw that. Let's take a look at that, see what it's all about. Thanks for joining, Enkiter. And I don't know if you've seen the live streams, but your name's come up a few times because you've brought up good ideas over the last, couple weeks and couple months, frankly. So keep the ideas coming, and everybody keep the ideas coming. All right, so Lennar. So growth in the most recent quarter is the big problem. Now, home builder, curious to see a couple of things. And let me get out of the quarterly. I am the annual, so why am I not seeing the metrics I want to see? So I'm not seeing free cash flow in the just completed year, so I'd have to, I guess, dig around the investor relations page for Lennar to find that. But you can see their cash flow is really good in 23. And it really was good for 4 years. Wow, looks really good. When I look at profit margin and gross margin, so here's the home building business, and you see the gross margin really dropped. So they're getting squeezed. They're beginning to get squeezed. The home builder has to buy really expensive land, put in expensive materials, pay for labor, time, cost of money, and it looks like Lennar is getting squeezed. So understandably, their stock's, selling off a bit. Their stock did really well for a couple of years. It did surprise me how good the home builders did. I didn't expect that they were going to do as well as they did, but there you go. There's always an opportunity to learn something. And there's always a company out there that's, going to perform well. Lennar was that company for 3-4 years. But I think the times come where I think this industry is going to have a little bit of a tough time. Higher interest rates, we just talked about how the 10-year it went up for 2 days, but it's really, if you compare the last 5 years, the 10 years is near the high. And if we have that level of interest rates for a while, it's going to create more inventory. It's going to create more competition for Lennar. And it's going to continue this trend of them having a tough time selling their properties, probably having a discount, provide more incentives. And that margin squeeze is going to continue. So let's see how Lennar plays out. Lennar is a quality company. They're 37.5 billion in market cap, about 1-to-1 if you look at their revenue, and really low PE ratios. And reason for it is Lennar is not a stock where, in this case here, it's kind of bucking what you would expect or what I would expect. It's more than doubled its value, which is great. But historically, it's not a space. This is not a $500 billion company. It's been around for a long time. It's the biggest one in its space. And the reason for it is investors don't expect that these companies establish kind of a franchise business like a Google search that just becomes so darn valuable, and it's very consistent year after year. It keeps growing. The economy really depends on it. They really want Google search. Home sales are cyclical. You have good periods, bad periods, and this is new home sales. You have periods where you have really, really tough times, like 2009, 2010, 2011, 2012. These guys were just trying to survive. It was a really, really bad time for home builders. So we'll see how Lennar performs going forward. All right, let's get into the list of stocks that were requested. And the first one being Meta. So Meta is bouncing back from a sell-off yesterday. Over the 5-day, it's down 3.88. Most of that drop came yesterday. It was a pretty good drop across the board. Some stocks took it harder than others. Meta is a really good quality company. It is an expensive company, $1.5 trillion, but they are the leader in social apps. The revenue is $156 billion. PE, considering that, I would be continuing to buy into the leader in their industry. I think the PE is reasonable, especially that forward PE at 24.8. And analysts believe it's a strong buy, but it's fairly priced, just a 5% discount. Now, when I look at Meta, you can see that their growth rate is there. 22 is probably the year when they were trying to make the metaverse work, but it didn't work. So they had to pivot and say, hey, let's get back to the businesses that we know we really dominate in. And they've been growing their business quite well. I mean, look at that growth on a very big number. So good job, Meta. The stock's done really well for the last couple of years. Let's take a look at their margins. I often say that, Meta most definitely is kind of an obvious, winner. You see these metrics, 81% gross margin. And it makes sense, right? When I go on Facebook and I create content or I interact with my family or friends, I'm creating content or I'm creating impressions and engagement, and Facebook isn't paying me anything. I'm actually seeing ads and they're making money off my activity on Facebook, as well as Instagram and WhatsApp. I mean, those are 3 applications that I use. I'm using Threads. And so the product is kind of like the people that go on their platforms, and they have either 3 or 4 billion, that's with the B, people that are monthly active users. That is huge. I don't think there's any other application probably Google search, but there's no other application that people are engaged with, kind of like communicating with another person on Earth. It's its biggest meta. So that's really, really impressive. And I think a really good jumping off point for AI. I think that Meta AI is super impressive. I've been playing around with the different AI apps, and Meta AI is the real deal. I ask questions and it comes back with really good answers. I use the image creation, pretty good images, and this thing's free, completely free. So when you look at the competitors, right, like ChatGPT was, call it the original, AI killer app, and it certainly got a lot of attention. But when I use ChatGPT, you have to be at a certain point after you get your free, kind of uses, you have to pay. And I think that's going to be short lived, because Meta is completely free and they give you everything you need. And I would argue that I've tested responses that are specific to me. It might be different for different types of people, but Meta actually gave me better information and better responses than ChatGPT, and even Microsoft's AI, whatever they call theirs. And I even compared it against, Google's Gemini AI. I thought Meta AI performed the best. So Meta AI is a part of the business plan for the company. They have billions of monthly active users. they can get access to Meta AI, and they start a new business, a new successful business, which would be phenomenal. And I believe that that Meta AI business is not included in the valuation of Meta, which I'll show you in a bit. So that's just one more reason why I love being a Meta stockholder. Free cash flow, look at this crazy number, $52 billion of free cash. And that is why this company is worth $1.5 trillion. Is the investing community is like, yeah, Meta is just a money-making operation. And they, in general, I really get a lot of good experiences on Meta platforms. Just recently, right, we're bumping up on the end of year holidays. We just had Thanksgiving, and my interactions with especially my younger generation family is all on Meta platforms. It's on WhatsApp, it's on Instagram, it's on Facebook. I mean, the volume of my family's Facebook use is really peaking this time of year, and it's really positive. Like, my mom's birthday was yesterday, and on WhatsApp, I was able to FaceTime with one of her nieces who has 3 little kids, and it made my mom super happy. And on Instagram, as well as on Facebook, I was able to, inform everybody that it was her 89th birthday. And it just was like, 24 hours of just really, really cool, communication within the family. That's all on Meta. And I'm sure you guys are having similar experiences where you have friends, you have family that you get to communicate with using Meta. So I know that, sometimes politicians get out of their lane and start criticizing, oh, well, they have so much personal data. I'm sure they do. And they criticize it. And maybe there's good points to be made there. But in general, the way I see it is, this is another great success story in business where this application was created because we have a connected world. It provides a lot of value to the people that use it, positive experiences. And, at the end of the day, I consider it somewhat free. I have to pay for internet. I have to log on to Facebook or Instagram or WhatsApp, but it's free. It's like, man, that's great. I don't have to pay for it. If I have to, let's say, go watch a movie at a theater, I have to pay. If I want to go watch a football game, I have to pay. But Facebook and Instagram, they're free, so the consumer wins. So Meta is just a positive company in my book. Great growth, looks really good. Cash flows look phenomenal. Let me show you what I think the company is worth. It is the biggest investment in a stock that I've made. I should rephrase that. It's the most valuable investment that I have in a stock. But I've actually invested more in Google, but Meta stock has risen so much that it's the most valuable. I still think Meta is discounted, and I'm not including the Meta AI business. I'm not including I'm searching for the right words. The Ray-Ban glasses where they have augmented reality. Those are really a big hit, especially in Asia. There's been a lot of demand for those glasses. So we got a company that's discounted, that's the leader in social apps, that's just killing it. And they have this great AI business. So strategically, Meta is great. I'm going to keep my stock. Whenever we have a big pullback, I can't help myself. I buy more shares, even though I own $263,000 of shares. I just can't help myself. I have a hold just because it's the biggest holding that I have of all of them. And Google is number 2. You can see I've invested more in Google. It just hasn't gone up as much as my Meta stock. So Meta is one of those, man. I'm going to hold it for a long time. I think it's an obvious winner for the future strategically. It's just really, really well set up. Danielle Ahmed, thanks so much for joining. Appreciate you joining. We're in the middle of a string of stocks, and right now we are looking at Meta. We put up the comment. And now we're going to look at Google. And I own Goog, and other investors own Google with the L at the end. And I know that there's a little bit of a debate which one's better. I don't know. I went with this symbol. I think I'm doing just fine. And I don't know that there's a big difference in the two, but I'll let somebody else explain that. Over the 5-day, it's down a little bit, but this stock's really been doing well. It's up 8.4% over the 30-day, and over the 1 year, it's up 39.6%. You could see that the company was not the favorite to the market for a little while here in the year. Just negative stories were really circling, Alphabet. But I'll get into why I just think very highly of the company and why I'm an investor and will continue to be an investor. But really, after hitting a really low point in September, the stocks really worked. And this is, look at the PE 25, 22. If you look at some PEs, like, Palantir as an example, it's just a crazy, insane PE ratio, 370. It's like, oh. And you look at their growth, you're like, okay, 24% growth, 16% growth a year prior. And you're like, okay, we know that Alphabet is dominant in their markets and they're growing about the same rate. So it's like, why is Palantir so expensive? I don't know. Stock market always has its own style, its own momentum. Investors will buy what they think they ought to be buying. But look at Alphabet, 25 PE, 22 next year. Strong buy, and it's close to its price close to its value. 8% discount. That's very reasonable. I'll show you where I think this company's discounted. And actually, I'm pretty close to that number. So when we look at Google Alphabet, we are talking about, of course, Google search, and we're talking about YouTube, which I'm streaming on as we go through this live stream. And the thing about Google is the businesses that make just so much darn money for the company is Google search and YouTube. And what's beginning to make a lot of money for the company is their cloud business. They have a public cloud hyperscaler business. It's Google Cloud Platform, GCP, and it's doing really well. It's growing really nice. It's making money. It's kind of Google picks businesses where they know they can do really well. They can grow. They have strategic, advantages in that space, and it's going to make a lot of money. And Google Cloud is certainly becoming that business. And in that business, what is kind of lost in a lot of the news on Google Alphabet is that they developed their own chipset for AI. And in fact, Apple used it as well as other companies. So not necessarily to compete with NVIDIA, but because they're just a really smart organization. They started it 10 years ago, and now that's really a really good strategic asset for them, is they have their own chipset for AI. They also have quantum computing, which just announced, and there's no commercial use for quantum computing at the state where that technology is at, but it really shows how intelligent the organization is. So we got quantum computing included in this company. Robotaxi is probably the exciting new business that is going to be something. That could be the next YouTube. That could be the next big business for them. It is the leader in robotaxi. They have taxis that are driverless, driving people around. The public's getting really comfortable with it. And man, really exciting to see that business really take off. And then their AI business, their Gemini AI business. Now, that one, I'm not quite sure how it's going to change the company. It might be that some revenue is moved from their search business to the AI business. But I think that Gemini AI is excellent. Google's AI capabilities are excellent, and they are a top 3 competitor in the AI application space. So we will see how things play out there. But I am very comfortable with my investment in Google. Let's take a look at their margins and free cash flows. So they're growing the company nicely. It is a gigantic company, $339 billion. Okay. Palantir, 2.6 billion, like tiny. And the growth rate is not that exciting to me, but these guys are growing 14 on 339 billion. It's like, holy smokes. That's like 50 billion dollars of revenue growth in a year. That's like a big company. That's a big size company. All right. So we have gross margins of 58%, free cash flow of 55 billion, and it used to be 69. They're putting a lot of money into their data centers where they're buying a lot of AI chips to build out GPUs, graphical processing units. A lot of them are coming from NVIDIA, and they're really investing in the robotaxis. So there's a lot of investment going into the company, a lot of CapEx, and that's what's driving down their free cash flow. But look at this cash flow over time. Holy smokes, this company. No wonder they're worth more than $2 trillion. It's just a lot of value. Historically, investors look at free cash flow. That's really what tells you a company that is really valuable. And their margins are very good. Now, their margins on search are like 90%, but their margins are coming down because their Google Cloud business, they're doing a lot of things to grow the business like AI, as well as their robotaxi business. So that's what's been bringing down their margins a little bit. And they are a giant company, but 58% margins is very, very impressive. So that's their fundamentals. Looking at the valuation, so I have Google in my portfolio. And earlier in the year, I was buying more shares because it was more discounted, but the run up in the stocks really made it so that it is, in my opinion, discounted by about 10%. I think we saw analysts said it was discounted 7-8%. So I'm kind of near where analysts are saying, and I base it on free cash flows as well as earnings per share. To me, Google's another one of those obvious, hey, these guys are a big winner and they're going to continue to succeed. They have great advantages. They're very desirable. On really strong pullbacks, I buy into Google Alphabet. I put my big 3 that are like big companies that I just think are, winners are Meta, Google, Amazon. Those are the 3 that that should be a big part of my stock portfolio. All right. So we went over Google, Meta. Tomas, thanks for the question. Let's go over to Mike's question on CCI and QCOM. Nichix, thanks for joining. We will get to your comments, sir. You want to talk about Mercado Libre, NU, and Uber. You got it. We'll go over those. All right. So Mike wants to look at CCI. So Crown Castle. So Crown Castle owns, operates, and leases more than 40,000 cell towers, approximately 90,000 route miles of fiber supporting small cells and fiber solutions across every major U.S. market. Okay. It's a real estate investment trust. So they are operating the infrastructure, and then I imagine they charge the communications companies like an AT&T, a Verizon, a T-Mobile. Hey, when you use our network, we're going to charge you at these rates, and that's how they make money. All right. And they also probably charge um, commercial networking fees or residential network, internet, charges and so forth. They get a piece of that. The the kind of company that sells it to the consumer is going to be an AT&T or Verizon and so forth. But if it's handled on the infrastructure that these guys own, they participate in the revenue share that company is getting. So these guys are down a little bit today. It's been down for the 5-day, down for the month, and down 18% for the year. I like this space. I think they're smart to go into an infrastructure that's a necessity, right? Internet, communications, and so forth. Very smart. It's a $40 billion market cap company, 6.5 billion in revenue. P is a little high. I mean, this is a real estate investment trust. And over the 5-year, man, down 32%. That's a surprise. I mean, needless to say, especially during the COVID years, boy, did we need internet. We needed the internet uh, to do everything, to go to work, to have our kids go to school, to just do everything, communicate with loved ones because we were completely socially distanced. So that is interesting that the stock's down. Analysts say it's a hold, but it's discounted. And now with real estate investment trusts, I don't look at free cash flow because I think a real estate investment trust, they have certain rules where they have to distribute a good part of their earnings to stockholders. In this case here, they pay a nice dividend of 6.8%. So that looks pretty attractive to a person who wants income from their stocks. Now let's take a look at their revenue. Now the revenue, as expected in these years, it was growing, and then it stopped growing in 23. And looking at the quarterly, it looks like the worst quarters are behind them, and the most recent quarter, it was pretty flat. It was only down 0.9%. But I think that's what the story has been over the last, call it, year and a half or so, that revenue stopped growing. So what is going on? So you have rental revenue. Okay. Bear with me. I'm just trying to get my head around their financials, and then I could kind of share with you what I'm seeing. So funds from operations is what the company looks at, and they have to distribute a certain portion of that funds from operations to stockholders in the form of dividends. It looks like their funds from operations is going down a little bit. It's still pretty strong, but it is going down. And they're paying out a good percentage of it. You can see that more recently, their funds from operation have dropped. They've held their dividend rate the same, so it's a greater percentage of that funds from operations being paid out. So this one here, I think what I would do, I own one REIT, and that's CTRE. I'm okay with that one REIT. I don't think I want to buy any more REITs. But this company, if I felt like, hey, they're going to start growing their revenue, they have a new venture or a new idea that's going to improve their business, then I'd probably be interested in the stock. If it's going to be the same old kind of, nothing's going to change, I don't know that I would own the stock because what they've been doing has not been working. So I would want to understand, what are they going to do that's going to change this and get them back to their stock price being, around $200 per share. I think it's the right space to be in. It's not like, hey, they're in, like commercial REITs that own office buildings. Boy, they had a tough couple of years with employees wanting to work from home. So these guys are not in that space. They're in a space that I think is in high demand and should continue to be in high demand. So I would probably study the company. For me, I like the space. It's a quality company. and it might be a good rebound story. I'm not looking for another REIT, so I'd probably pass on keeping it on my watch list. But I could see that this is an idea to chase down and see if it's a good investment. So good luck with that, Mike. Qualcomm. So let's go over Qualcomm. So Qualcomm, I've invested in semiconductor companies for a long time, and I've invested in NVIDIA, but not during the big heyday of NVIDIA. I invested in Broadcom during the heyday of Broadcom. I sold too early, and shame on me, but I owned it. I invested in NVIDIA, Intel, unfortunately, and got my, what handed to me. And so I've been an investor in semiconductor, and Qualcomm is a stock that I'm buying into. I think it's discounted. I think I see the fundamentals and I like what I'm seeing. I look at them from a business perspective and I like what I'm seeing. So, analysts believe, like I do, that this stock is discounted and it's a buy. Look at these PEs, 16.9, 13.5. Compare that to Broadcom and you're like, holy smokes, I'm getting a really, really good company for a song. And I think Broadcom, let me put that up here. Yeah, so Broadcom PE 179. It's like, whoa. Seems a little bit overpriced to me, which is why I sold the stock. But this one's only 16. It's like, wow, that's pretty good. Well, that must mean that they're not growing. What's going on? Up only 6%. Look at this. It really went up nicely and then it came down. It offered up what I thought was a really good buying opportunity. When I study their financials, I'm seeing growth. Okay. And when I look at the quarterly, I'm seeing strong growth in the most recent quarter. So I'm seeing fundamentals that are pretty strong. And Qualcomm's, area of excellence, expertise, leadership is in communications. So if we look at mobile phones, smartphones, there's a lot of Qualcomm technology in that particular use case, as well as other use cases that are communications involved. And that just keeps growing. If you look at cars, yeah, they're connected. I bought my wife a new car at the beginning of November, excuse me. And that car's got like so much technology. It's always connected. The navigation's really improved on new cars, and you can talk to your car and it tells you what's around you. You can ask it for it, a recommendation of a restaurant. Just really, really impressive. Well, that's all connected. It's all connected by technology, semiconductors, and Qualcomm is right in that space. They've been doing that for 30, 40 years. They started in the military and they do that for the military. They continue to have military contracts, which is good to know because that's pretty stable. And they're beginning to grow. So I like that about Qualcomm. Let's take a look at their margins and their free cash flow. So gross margins, 56%, solid. Okay. It's not Meta, it's more like Google, but it's very solid, very consistent too. Free cash flow, beautiful. $11 billion free cash flow. Look at that. It's been a cash flow generating machine. Go Qualcomm. So I'm seeing revenue growth. I'm seeing great cash flow. I'm seeing really good margins. Balance sheet's good. And I believe that Qualcomm is discounted. So I keep buying into Qualcomm. It's the one semiconductor stock that's well known that I think is really misunderstood or just being forgotten. And I continue to buy shares because I think it's discounted by 72%. I'm way above what analysts believe. I just love that free cash flow. And I think their earnings per share look great. They're growing the company. They're strategically in the right spaces. They are also involved in data center, and they're involved in some ways with AI, but it's not a pure play AI play like NVIDIA. But this is a really good one for me to, keep loading up on shares of Qualcomm as it sells off. So that's my feeling on that, Mike. And I know that I've created a video on my channel. You could search it where I reviewed Qualcomm and went over it. It's selling off today, so I'll be happy to buy some shares in Qualcomm today. I'm probably going to buy, I dollar cost average into positions and companies that I want to buy into, Qualcomm being one of them. I'm probably going to buy in the last half hour of trading today. I just have a feeling that we're going to see a head fake today. The Russell's selling off. It was flying high earlier. Wouldn't be shocked if these numbers are red at the end of the day. So I don't want to buy too early. I'm not a day trader, but I also like following the market and understanding what it's doing. And yesterday's drastic sell-off, shows me that there is sentiment out there that stocks are expensive. And as soon as you see kind of selling behavior, boy, people just rush for the exits. So let's see how things play out. I'll buy my Qualcomm shares late in the day just to make sure I don't overpay. And I dollar cost average just so that I can buy into great companies and buy when the buying is good, but I'm not good enough to know that on this particular day is the best time to buy, $100,000 of Qualcomm. No, I'll buy it over time, and I'll just average in my investment into that company. So, Mike, thanks for sharing, or thanks for asking, and good luck with your analysis on both of those. All right, so Mr. N. Kiter. Yeah, Micron. So Micron's somewhat in the Qualcomm Broadcom space. So let's keep those two open and take a look at Micron. Yeah, I thought, man, holy smokes, how much? 17% down. And it's, what's been interesting is, and this has been updated, right? So you have growth of 84%. But the guidance was just not like spectacular, like, we're gonna do so well. It was just like, hey, we should do okay. It's gonna be good growth, but it wasn't overly enthusiastic, and the market sells it off. So that it's more a qualitative kind of observation. It's not like the numbers telling me this. The numbers, when you look at Micron, the numbers are strong. But the qualitative kind of observation is analysts are nervous. They're nervous that they're going to be owning a stock that's going to drop really fast. And this one has seen its fair shares of drops, right? It was flying high during the AI hype cycle at $153 a share, and then it just dropped, and almost, investors almost lost 50% of their investment. And it's gone up and it's gone down. It's gone up. This one is just not, investors are not bought in on, this one's just going to be a long-term winner. So Broadcom has been the most desirable, NVIDIA has been the most desirable semiconductor stock in the last 5 years. Number 2 is Broadcom. You see this, upward rise just been incredible, especially recently when it's just jumped up. Holy smokes. And Micron just hasn't had the same success. They are in the data center. They do provide technologies, semiconductors and microprocessors that are really important for the data center. They're just not following the same pattern as NVIDIA and Broadcom. Their fundamentals are good. Analysts believe that it's highly discounted. I can't argue with that. I just, the reality is that the semiconductor space is overpriced in a general opinion. If you've watched my channel for the last 2 years, it's not something I'm saying for the first time. NVIDIA is incredible. It's overpriced. It's just a company, a semiconductor company, is going to show its cyclical nature, at some point, and then we'll see where the Nvidia stock goes. The Broadcom stock, I was a shareholder. I sold my stock because it's a cyclical industry. And I think Broadcom did really go big on their forward guidance. So if they can pull it off, great. That'll be incredible. The numbers for Broadcom are somewhat deceiving, and I'll tell you why. This is not organic growth. They acquired a big business, VMware. So when you compare the trailing 12 months to the last full year, you're seeing 44%, but that's because they acquired a business. So it's not organic. So organic's the best business. When you see Google search grow, that's organic. You see Meta grow, that's organic. They did it by internal innovation, by doing better work for the customer, providing more value and all that good stuff. This is going to be, was acquisitive growth. Fast forward a year, they're going to have to compare to this number. And then I think that's when, we'll see if they keep this $1 trillion valuation. I don't think that's going to be the case. I think they're worth more like 300 billion, 400 billion, but that's just one investor's opinion. And we'll see how it goes. Micron is not following the same pattern. I'm not an investor in Micron. I think it's a well-run business. I think they're in a good space. Is it going to rise? I don't know. I think these guys are, Broadcom and Nvidia are so priced so high that there's already a lot of, I would say that the investors that are in those two stocks have to be a little worried that, hey, at what point do I need to get out of this position and lock in those gains? It doesn't count if your stock's worth, $500 a share and then it drops to $250. I guess you have the memory of, back in the day when that was worth $500 a share. But if you'd have locked it in, you feel like, hey, that was a really good move. So we'll see. I think Micron, I can't argue with what the analysts say. I think it's discounted. It's just, what's the sentiment around the stock for the last 6 months or so? There's no clear direction of where the stock's going to go. And the last 5 year, no clear direction. Maybe the market thinks that their product is not unique enough. Their moat isn't strong enough, that they have competitors that could replace them. That might be the case. So hopefully those comments are interesting, Nkiter. Good luck with Micron. All right. So Danielle, thanks for joining. Hey, cool picture, little astronaut. All right. So Mercado Libre, new holdings in Uber. So Mercado Libre is growing down in Latin America, South America, and so forth. And they're a really, really neat company, and they're growing quite nicely. They are, compared to Amazon, they're quite a bit smaller than Amazon or Alibaba, and they're growing quite nicely. So that's really good. Now, my opinion is that their stock price is a little too high. They're trading at, an $85 billion company. Looks like their stock's pulled back a bit. It's down again today. And when I compared Mercado Libre versus Amazon and Alibaba, I'd rather own Amazon and Alibaba, and I own both. And this one here, it's not discounted. It's priced up quite a bit. But over the past year, look at that. It's only up 4%. Interesting. I think at certain points of the year, it was doing really great. But there's just more risk. I'm in the US, and if I'm going to buy Mercado Libre, I'm buying outside the country, higher risk. And, will Amazon go after Latin America? I think they will. I think I have relatives in Mexico. They buy off Amazon. In fact, I took one of my sons spent like 6 months down in Mexico City. And when he needed to buy stuff, rather than us trying to ship him stuff, He would just order it on Amazon. Or we'd order it on, we'd have a relative, because, I think the laws are, if I'm in the US and I try to order something on Amazon in Mexico, it doesn't let me. But somebody who has a user in Mexico, they could order it, and then it got to, my son who needed it without all the red tape, right? So that's how we were able to work around, the rules there. And Amazon, I think, could compete against Mercado Libre at some point. If that became the case, like, hey, Amazon says, hey, one of our big growth markets is going to be Latin America. Look out. Mercado Libre, man, you have your hands full. You're going up against one of the strongest companies on the planet that really knows commerce. So I've stayed away from Mercado Libre. My opinion is it's a really neat company. It has a discount. But I also, at the time, last time I looked at Mercado Libre, Amazon was trading down. Let me show you Amazon's chart. I'll show it here. See, the market's selling off a little bit. And I want to look at Amazon. So earlier in the year, for whatever reason, the market said, hey, Amazon's not as great as everybody thinks they are. And I thought, no, I think they're better than what everybody thinks. So I started buying into Amazon big. I'm like, yeah, I'll take that discount. Thank you very much. And fortunately for stockholders, the stock really moved from August to now. It's up 39%. So when I looked at Mercado Libre, Amazon was trading around here, and I'm like, oh, I'll buy Amazon over Mercado Libre. That's a no-brainer. This is like an obvious. This is like, would you rather have the Kansas City Chiefs, or, I'm not going to say a team because I don't want to upset anybody in that region, but let's say you're going to a bottom, or just an average team. I'll take the Kansas City Chiefs. They're the champs, and they know how to win. Amazon really knows e-commerce. Nobody knows it better than they do. They're the dominant business. The only competitor they have in a region that can stand up to Amazon is Alibaba in China and maybe surrounding Asian countries near China. Everybody else is really contending with a 20,000-pound gorilla. Good luck competing against Amazon. In e-commerce, if you're competing against e-commerce against Amazon, you're going to have a hard time. So the long-term story on Mercado Libre, it was a, really interesting stock when, investors bought here and they rode up the rally up to here. Congratulations. Really phenomenal rise. You made good money. Just looking forward, I don't know. I'd rather be an investor in Amazon and Alibaba, which I am. And I'm not going to invest in too many companies that do the same thing. I have to form my opinion on who's going to win. You can't pick all teams because you spread your capital. I get that. But then you're not really making a decision on who is the best in the space. My opinion, Amazon. In China, Alibaba. Those are the two plays that I have. So that's my opinion on Mercado Libre. New Holdings looked really good. We looked at New Holdings. One or two live streams ago, and they look good. They looked really good. It's outside my home country, which is a positive. Financial services have been doing great in my portfolio. These guys do business in a region that I am interested in. I understand to some extent. I'm not going to claim to be an expert. That's why I love talking to Tomas, because he's down in Argentina. He's been educating me, and it's been super interesting to hear things about Argentina. I have, as mentioned, relatives down in Mexico. I get to talk to them. So I think this business is really making it happen. There's a pretty strong pullback on New Holdings. They've been growing their business really nicely. They're getting bigger. and they really grew. When it comes to banks, you got to, my opinion, you got to look at book value, and book value tells you, is that bank getting more valuable? And the book value for New Holdings looked great. Tangible book value. They went from 27 cents to $1.59. This is incredible. You look at, like, I own Citigroup, and they grow a little bit, just tiny bit, because they're a big bank. You look at JP Morgan, they did a nice job over 10 years. And that's why their stock is like the most valuable bank on the market. Bank of America, ditto. But these numbers make those numbers, these are better numbers than what those banks I just mentioned. Okay. So this looks interesting to me. I haven't done enough homework to say if I'm going to buy, and I haven't done enough homework to give you a full analysis, but I'm going to put that on my to-do list, because New Holdings is looking good to me, but that's kind of high level. I got to go deep. I got to see, hey, what do I think the stock is priced at? And I'm probably going to talk to my friend Tomas down in Argentina and get his just high level, hey, what do you think about these economies? Where's the economy going down in Argentina, Brazil, Colombia? And I'm probably going to talk to some other people I know in Latin America and just get a sense of, is the economy, do you expect it's going to do a little better, or is it, on the edge of getting a lot worse? So I'm interested in New Holdings. So I'll give you an opinion there. And then Uber. You guys that watch my channel, you know that I'm all in on Uber. So Uber is down. I will buy some shares today, late in the trading day. This stock has worked. It's worked nicely. I bought it at the right time. And just strategically, their market cap's 127 billion. These guys are growing nicely. And what's the story that's keeping the stock down is, in a way, there's stories that, hey, robotaxi is going to be a big threat to Uber. And it's both. It's a threat and an opportunity. Now, if Uber can use their massive network, their flywheel, to take advantage of robotaxi, it's a huge opportunity, because it could reduce their costs, it could make them more competitive, and those things are in place. So the stories of, well, Tesla is going to come out with a robotaxi service and they're going to compete against Uber. Okay, I could understand that story, but right now it's more of a story than it is reality. In order for Tesla to create something that even resembles Uber or Lyft, maybe Tesla acquire Lyft, maybe, they would have to build a giant network, which is going to take time, specialization. Okay. And second, Tesla has to get their robotaxi, cars on the road. They haven't done that. And just imagine if a Tesla car runs somebody over. It's like, oh my God, that's going to be really, really bad and very bad news. So there's just a lot there that, other companies are going to have to build so much to be competitive with Uber. Now, Uber's already partnering with Waymo, which is Alphabet's robotaxi, and they're partnering with Chinese robotaxi companies. And in Abu Dhabi, you'll be able to catch an Uber and get self-driving robotaxi service. And in the United States, there's 2 markets where they're partnering with Waymo, Google Alphabet's technology. So I think Uber is going to capitalize on robotaxi. The company is number 1 in their space. Clearly, they've beat Lyft, then they beat everybody else. Internationally, they're growing really fast, and that's really good to see. I think that's where the big opportunity for growth is for Uber, just growing around the world. I've taken Ubers in Germany, Mexico, Italy, trying to think of all the countries, Canada, US, obviously, all over the US. And I don't rent cars anymore. I used to travel and rent cars. I haven't rented a car in a long time. I just Uber everywhere. I Uber here at home. If I'm going to go to a football game and the stadium that I'm going to here in the United States, it's getting pretty ridiculous. SoFi Stadium, I live in LA. They want like $40 for parking. 40. Well, I'll just drive my car to my in-laws and take a $20 Uber ride. Then I reduce the amount of time it takes to get to and from, and I pay about the same amount, but I save money. I didn't fuel cost and my car potentially being damaged, door dinged, and so forth. So I think the ride sharing is so darn convenient that it's disrupting other business models like high parking fees. When I travel on business, when you go to big, like I was in Manhattan a month ago, I Ubered everywhere. If you parked in Manhattan, you're spending more than you would spend on an Uber easily. So there's just a lot there for Uber to take advantage of, which is why I've been buying into Uber. To show you what I think the company is worth and the discount that I've calculated on Uber, I think it's highly discounted just because their free cash flow is there, the growth is there, earnings per share is there, the stock's being sold off. I mean, thank you very much, stock market. I would gladly be greedy when others are fearful. And I'll be fearful when everybody else is greedy. People are fearful around the Uber stock. But I'm looking at the business going, building, so more than 1 million people every hour hail a ride on Uber. 1 million every hour. And it keeps growing. That is such scale. That's the moat. That's the competitive advantage. So thank you very much, stock market. I appreciate the discount on Uber. I will continue to buy shares in Uber. All right, Niche Hicks, good to see you, man. Thanks for tuning in. So CCC took a hit in their business when T-Mobile and Sprint combined. Yeah, I can understand that. Yeah, you're welcome, Mike. Yeah, I'm gonna keep loading up on Qualcomm, and we'll see where that goes. But man, those cash flows at Qualcomm, love those cash flows, and I think it's a pretty solid semiconductor company. Tarek Matar, can you cover biopharma? AbbVie, I've been an investor in AbbVie, and the healthcare space has been just getting hammered. Now, the thing about big sectors, and healthcare is one of the biggest ones. Technology's become so darn big. It's the biggest one now, but 5 years ago, healthcare was pretty darn big. And AbbVie has been a super successful company. They pay a nice dividend, strong buy, 20% discount. I haven't looked at AbbVie in a little while, so it'd be good. Wow, what's up with this drop? What happened? I've been out of AbbVie for a little while. So slow growth. See how they were growing really fast. Some of this was acquisitive. They did lose. AbbVie lost. Their patent ran out on one of their biggest drugs. I think it was the biggest drug that they had in their portfolio, and I think that's what caused a lot of concern around the stock. But this is a big cap stock, right? 304 billion. That's a big cap stock. And when we look at their financials, let's look at the quarterly. Yeah, the growth is fine. Look at that. 3%, 4%. They did have 2 new drugs that were trying to fill in that gap of that big drug that got lost due to the patent and expiring. They also have really good cash businesses. Botox, that treatment, they acquired Botox when they acquired a company. I forgot the name of the company, but Botox is not you can get Botox covered by insurance if it's for medical reasons. The original um, use case for Botox was people that had issues with their eyes. They would get an injection, and Botox will relax muscles. It'll make muscles behave in a way that doctors believe they should be behaving, and it would really help people with their eyes. But what they realized was that could also be used for cosmetic reasons. That way, you can get Botox in a facial muscle, and it'll relieve wrinkles. It'll relieve and make people look more attractive, fewer wrinkles. And that Botox franchise is a really good moneymaker for them and a big cash producer. So that continues to be successful, but a majority of the company is pharmaceutical. They are a very well-run company, but you could see that in the quarterly, they kind of had a bad run. But what caused that giant drop? So that is some homework for you. Trick is what is this? Like, what happened here? See if we, and I can't go through all the news articles because it looks like the news was. Did they announce that, oh, something bad happened? And what's that bad that happened? So you got to do some homework there. This is a quality company. This is like, it's like J&J, Eli Lilly. They're like the really high quality companies in this space, pharmaceutical. AbbVie's like right underneath that level. So it's a quality company. I've invested in it. Happy I invested in it. So I would investigate this piece, make sure there isn't any like significant problem with the stock, and then value the company. I would venture to guess that it's going to value where these analysts are saying around 20% discount. And right now, my bet is on Pfizer. I think Pfizer is going to come back. And I would not be an investor in AbbVie for now, just because I've got my investment in Pfizer. But this is an investment that I would make if I didn't own Pfizer. If these guys check out, I would be very interested in AbbVie. I've made money on them in the past, and these guys are a quality outfit. They are a good company. What makes a good company? Well, high margins, 70%. Beautiful. What makes good company? High cash flows. But you can see the cash flows have really contracted. But look at these cash flows. Hoo-hoo. Ridiculous. Ridiculous in a good way. Very, very impressive. So this is a solid company. You may catch a stock that has been discounted nicely, and then you could see a nice rise in the stock price, and you get paid a nice dividend. Pretty good situation. But you got to do your homework. What the heck's going on here? What do you expect the stock's going to do over time? Is it going to go this way? Or is more trouble ahead? Or is the trouble behind them? Thanks for asking. Good luck on that. Good luck on that. Mercado Libre originated out of Argentina. Very cool. Plex Alanche. Yeah, I'll be buying some stocks today. I just kind of went over Uber. I'm going to buy late today, and I dollar cost average my investment. So Brazil is really bad right now. A lot of government spending, short-term problems. Oh, interesting. Interesting. Yeah. So new is it's expanding into Africa. Very interesting. Cool. So this is Regeneron, right? Let me make sure. Yeah, I covered all the stocks. So Regeneron, I think, is so these guys were something else like for a while. Look at this upward slope. Very nice. And then they really have come down over the 5-year. Okay, so Regeneron, they're a pharma company. I like this upward slope, 75 billion. PEs are very reasonable. Discount 50%. Growth is looking okay. They had bad growth in one quarter. So what's the story that's causing the sell-off is interesting to find out because this is a valuable business. 50% margins, free cash flow looks good. It has been coming down. So what's the story behind the sell-off? I mean, when you look at healthcare is one of those spaces that hasn't been going crazy like semiconductor and technology. I mean, you find value. You're like, we just looked at AbbVie, talked about Pfizer, Regeneron's looking like, there's probably some value here. And when the sentiment changes around healthcare, pharma, I think these stocks are going to do really well. I would do some homework on this one. I think there's an opportunity here to pick something up that has value, something that's really worked over time, but for some reason is really sold off. Over the 1 year, it's down 17%, a big drop. So something happened this year that the market's not liking. Is one of their drugs going to go off patent? Is a competitor in their space that's taking, patients away because they have a drug that's better or competes with their drugs? There's something there that you would need to investigate before you make a decision. All right, everybody. So really, really good string of questions. Thank you for attending. Thanks for the questions there. Let's take a look at that stock market, see what's going on. So it's holding at around the same rates. Again, I think, I'm going to wait until the last half hour of trading before I make any decisions to buy. And we'll see where it goes. One stock that I'm dollar cost averaging my sales is Ternium, and it's up. So I'm probably going to be selling some shares. And this stock it's a good company. I'm just getting out of materials. I realized that, I want to be good at a couple of sectors, and materials is just not going to be one of those sectors that is probably going to be in my portfolio. And I've been selling out of it just over time. This stock for a while did really well, and then it just hasn't done much. And I think very highly of the company. I think strategically they're doing okay, but I'm going to be selling out of it. All right, so market's just holding its level, but again, let's see what happens late in the trading session. Russell is still down. So, all right, everybody. So thanks for tuning in. I appreciate it. Everybody, good luck with your stocks. Good luck with your Thursday. And thank you so much for tuning in. All right. I'll see you guys. I'll try to stream tomorrow morning as well. And hopefully I see some of you during that stream. Thank you. Bye.